I want to speak with you today about a particular test of temperament that the market delivers not with a roar, but with a whisper. It's the trial of the sideways market, those long, seemingly purposeless seasons where prices meander within a narrow band, where progress is invisible, and the disciplined act of adding capital begins to feel less like building a fortress and more like pouring funds into a void. For the intelligent investor, especially one who has chosen the prudent path of a low-cost index fund, this quiet stretch can be more psychologically taxing than a sharp decline. A decline at least has the decency to be dramatic. It stirs the blood and presents a clear, if frightening, opportunity. The sideways market simply bores you into submission, tempting you to abandon a sound plan out of sheer frustration that nothing is happening. We live in a world conditioned for constant feedback. We track our steps, monitor our hearts, and refresh our screens, seeking that little jolt of validation that confirms we are moving forward. The financial ecosystem is built upon this hunger, turning the natural fluctuations of business value into a 24-hour spectacle of green arrows and red arrows, a breathless commentary on every minor twitch. This environment breeds a dangerous assumption that motion equals progress and stillness equals failure. Yet, the market, a mirror of collective human enterprise, spends a great deal of its life not in dramatic trends, but in digestion and consolidation. These periods are not malfunctions, they are the essential deep breaths of the system. The profound irony, which the philosophical investor must grasp, is that in our frantic search for constant upward motion, we often blind ourselves to the extraordinary quiet opportunity that sideways motion provides. The parable of the two librarians. Let me illustrate with a parable. Consider two librarians entrusted with building a great library for their town, a library meant to serve generations. The first librarian is measured by a daily auditor. Each evening, this auditor appraises the unfinished library's current market value based on the day's sentiment, the weather, and the headlines. Some days, feeling optimistic, the auditor declares a magnificent project. This half-built library is worth $10 million. The librarian feels proud, her work validated. Other days, the auditor is pessimistic. Who reads books anymore? This white elephant is worth only $5 million. The librarian feels despondent, her efforts seemingly worthless. Her enthusiasm for ordering new books, shelving volumes, and training staff waxes and wanes with this daily external valuation. When the auditor, for months on end, values the library at the same flat $7.5 million, the librarian becomes deeply discouraged. I am working every day, she thinks, but the value of my work isn't increasing. Why should I bother acquiring new books or polishing the shelves? It makes no difference to the appraisal. Her work slows, then stops. The library's growth stagnates. The second librarian pays the auditor no mind. She understands his job is to shout numbers. Her job is to build a library. Her focus is on the inventory ledger and the community's needs. Each day, she methodically acquires valuable new books, catalogs them, repairs old volumes, and trains her staff. She finds deep satisfaction in watching the ledger of acquired knowledge grow, knowing that each added volume increases the library's ultimate utility and enduring worth, regardless of today's capricious appraisal. When the auditor enters his long season of stagnant valuation, she barely notices. In fact, she recognizes an advantage. The distraction of dramatic price changes is gone. She can focus entirely on the steady, meaningful work of accumulation and improvement. While the first library's growth halts, the second library grows richer, more useful, and more resilient by the day, its true value compounding in silence. You, the index fund investor, are the librarian. Your regular investments are the new books. Your portfolio's quoted value is the auditor's shout. A sideways market is that long season where the auditor, for his own inscrutable reasons, assigns the same value day after day. The philosophical investor learns to ignore the shout and focus on the ledger, the growing number of shares you own. For in a sideways market, you are not treading water. You are acquiring ownership stakes in the world's finest enterprises at a consistent, stable price. This is not a setback. It is a gift of time, a prolonged sale on fractional ownership of global productivity. The Stoics resolve controlling the controllable. The Stoic philosophers, like Marcus Aurelius, who governed an empire amidst chaos, taught the supreme importance of distinguishing between what is within our control and what is not. Our judgments, our actions, our desires. These are our domain. External events, the opinions of others, and the fluctuations of the marketplace are not. A sideways market is a masterful teacher of this Stoic discipline. You cannot control the market price. You cannot will the S&P 500 to break out of its range. That is an external. To rail against it, to feel discouraged by it, is as futile as shaking your fist at a cloudy sky. It expends precious energy on an enemy you cannot engage. What is within your control? Your savings rate is yours to command. Your automatic investment plan is a directive you set. Your decision to turn off the financial news, which must manufacture drama from stillness to hold your attention, is yours to make. Your choice to use this quiet time to read history, study great businesses, or simply live your life fully is entirely your own. The Stoic investor in a sideways market performs a profound pivot. They redirect all their attention and effort from the uncontrollable, the ticker, to the controllable, their habits, their knowledge, their peace of mind. They transform a period of external stagnation into a period of internal cultivation. The arithmetic of stealth, compounding. When the numbers don't move, we worship the visible miracle of compounding, the chart that curves exponentially upward. But the most potent compounding often occurs unseen, in the flat segments of the graph. A sideways market is the stealth bomber of wealth building. Understand this mechanism. When you own an index fund, you own companies that generate profits. A portion of those profits is returned to you as dividends. In a sound, low-cost index fund, these dividends are automatically reinvested to purchase more shares for you. In a roaring bull market, this is wonderful and obvious. Dividends buy new shares, and those shares immediately rise in price. The effect is visibly amplified. In a sideways market, this mechanism is more powerful but completely invisible. The share price is flat. Therefore, your dividends are constantly buying you additional shares at that same attractive, stable price. You're increasing your ownership stake significantly using the company's own profits, yet your account statement shows no net change. The compounding engine is running at full throttle, but the odometer isn't ticking over. The philosophical investor doesn't need the odometer's validation. They understand the engine's sound. They know that when the market finally awakens and reprices the accumulated intrinsic value, they will own a vastly larger portion of the enterprise than when the sideways period began. The flat line on your chart is an illusion. Beneath it, your economic fortress is gaining bricks at an accelerated rate. Socratic wisdom, knowing that you know nothing. About tomorrow, Socrates' great wisdom was his acknowledgement of his own ignorance. In investing, this humility is your shield against the sideways market's greatest temptation, the belief that you know what comes next. The market whispers seductive questions during these periods. Has growth permanently stalled? Is this the new normal? Shouldn't I wait for a clear signal before investing more? These questions imply that you or someone can know the answer. The Socratic investor responds with disciplined humility. I do not know when the market will move. I cannot know. Therefore, I will not build my strategy on knowing. Your circle of competence in this context is not a list of industries, but a profound understanding of your own limitations. You are competent to know that owning a broad swath of businesses is wise. You are competent to know that consistent investment is mathematically sound. You are competent to know that you are incapable of timing the market's moods. Staying within this circle means ignoring the siren song of waiting for clarity. Clarity always arrives in hindsight, far too late to be of any use. The wise action is to proceed with your plan precisely because you admit you cannot predict the alternative. The Tao of the flat line, Wu Wei, and a trendless world Taoist philosophy offers the concept of Wu Wei. Effortless action, or action through non-action. It is the art of aligning with the natural flow of reality, like a river navigating its course, not straining against it. The impatient investor, faced with a flat market, feels a compulsive need to do something. This isn't working, they declare, so they abandon their boring static index fund. They chase a thematic ETF, a hot stock, a speculative story. This is action against the flow. It is thrashing in calm water, creating ripples of complexity, transaction costs, and tax consequences. It is effort that defeats itself. The philosophical investor practices Wu Wei. Their major, decisive action was taken long ago, the establishment of a simple, automatic, and sound plan. Now, in the sideways market, their action is the disciplined non-action of not interfering. They let the automated investments run. They do not check prices. They understand that their strategy is not broken. It is being given the precious gift of time to work its deep magic. Their job is not to force growth, but to remain perfectly aligned with the process that guarantees it over time. The market's stillness is not a problem to be solved. It is a condition to be accepted and utilized. In doing less, they accomplish infinitely more. The long view, memento mori, for the impatient soul. The Stoics also practice memento mori, remembering our mortality. Far from being morbid, its purpose is to instill urgent perspective. It clarifies what is trivial and what is eternal. Apply this lens to a sideways market. You are investing for a retirement that may be decades distant. You are investing for a legacy that may span a century. Against this vast horizon, what is an 18-month or even a 5-year period where the market goes nowhere? It is a mere pixel on a giant screen. It is statistically insignificant noise in a lifelong journey. When frustration with the lack of progress bites at you, remember the monumental scale of your endeavor. You are not day trading for a weekend's profit. You are planting an oak forest. The acorns will not become mighty oaks in a season. There will be years where their growth is imperceptible above ground. They are building their root systems, gathering strength for the colossal growth to come. Your job is to ensure they are watered and protected, not to dig them up each week to measure the roots. The sideways market is a season of profound root growth. Have the perspective to appreciate the unseen foundational development, the virtue of temperance, the golden mean, between boredom and fear. Aristotle defined virtue as the golden mean between two destructive extremes. For the sideways market, the essential virtue is temperance, self-restraint, and steady moderation. It sits perfectly between the two vices. This market breeds boredom-induced recklessness and discouragement, induced paralysis. Boredom-induced recklessness is the itch for stimulation. It's the investor who, weary of no returns, leverages their portfolio, dives into options, or bets on volatile cryptocurrencies just to make something happen. This is greed born not of opportunity, but of impatience, a vice that masquerades as action. Discouragement-induced paralysis is the slow, quiet fear that the system is broken. It's the investor who stops their automatic investments, who hoards cash on the sidelines until the trend resumes, who lets the stagnation breed a passive, nagging doubt that erodes their commitment to the plan. The temperate investor rejects both extremes. They do not seek the thrilling, dangerous action. Nor do they retreat into frozen, fearful inaction. They embody steady-state discipline. They simply continue. They understand that the most profitable path in finance often feels profoundly boring, and they have the strength of character to not only endure that boredom, but to embrace it as a sign they're on the right track. The interconnectedness of patience, your role in the ecosystem. A final piece of wisdom, this time from Eastern thought, the principle of interconnectedness. Your investment journey is not an isolated event. It is part of a vast, dynamic system that includes other investors, companies, the economy, and future generations. In a sideways market, your disciplined, continuous investment, though it feels solitary and unrewarded, performs a vital systemic function. You are providing steady, patient capital. You are the antithesis of the frantic speculator. By simply continuing your plan, you are voting with your dollars for long-term stability over short-term chaos. You are supporting the thousands of companies in your index fund with the ultimate gift an owner can give, time and patience. This disciplined capital is the lifeblood that allows businesses to plan, innovate, and grow through uncertain periods, knowing that not all of their owners are looking at a quarterly statement. You are, in a small but real way, helping to stabilize the very system you are counting on. This perspective elevates your actions from a personal grind to a participation in a grand, stabilizing cycle. Conclusion: the gift of the calm. So, if you find yourself in the doldrums of a sideways market, I would offer you this reframe: do not curse the calm, thank it. This is the time when your financial discipline is forged into unbreakable habit. This is when you accumulate the crucial shares that will become the engine of your future wealth. This is when you learn to derive satisfaction not from a flashing green number, but from the quiet power of a process faithfully followed. Remember the librarian. Ignore the auditor's stagnant shout. Focus on your growing ledger of ownership. Keep acquiring your shares. The market's silence is not indifference. It is an invitation to build, without distraction, the foundation of something truly enduring. Keep faith with the process. Your future self will look back on these quiet seasons not as wasted time, but as the secret, steady building years that made all the difference. In the end, we control our process, not the outcome. And part of a wise process is curating the ideas that shape your strategy. If this channel serves as a useful filter for you, I'd ask you to make one small, controllable decision to improve its odds of reaching others. Hit like to affirm the principle. Click subscribe to ensure your strategy gets the next insight. And if you found value, sharing it might be the highest odds investment you make in a friend's financial education today. Your support is what makes creating these videos worthwhile. Thank you.